Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Okay, we've been all over this as the process has progressed over the past month or so. Now we know, Carol, OpenAI completed a deal to raise $6.6 billion in new funding. It gives the company a valuation of $157 billion. And the idea is that the funding will help bolster their efforts to be the world's leading Gen AI company, bringing the leading technology with it.
General Motors has a market cap of $50 billion. I know it's not apples to apples, but I like to just throw something out there.
One's public, one's private.
That's true. I know. It's just kind of wild. All right. So is it a sure thing? Is it a sign of the top? We continue to have so many questions. So back with us is Bloomberg News AI reporter Rachel Metz. She's out there in our San Francisco bureau. Rachel, first of all, let's walk everybody through this global funding raise. Who, how much, how impressive is this funding round in OpenAI? It sounds rather impressive.
It is rather impressive. I mean, this is a ton of money, and there are a bunch of people and firms involved, including Thrive Capital. You have NVIDIA, which also makes the chips that are very, very important for this kind of work. I believe Khosla Ventures was part of it as well. A whole bunch of other players besides. And I think what's so interesting is that, well, like the size of it, of the amount of money they're getting, the size of their valuation, but also what they're doing with this money. They have to raise this kind of money if they want to keep making the kind of AI software that they're making, because it costs gobs of money just to make this stuff.
Where are those costs? I mean, is this all NVIDIA chips that they're spending the money on? Is it that the engineers who can do this stuff are paid upwards of $1 million a year, Rachel? Is it the server costs? Yes, yes, and yes. What am I missing?
Yeah, is it why Jensen Huang is saying, what is it? Everything is awesome, or what was the word I forget what he said. Anyway,
he said demand is insane.
Insane. That's it.
Demand is insane. Okay. No, I mean, okay. So like, think about it this way. If you want to train a state of the art AI model, like a large language model right now, you're going to spend easily hundreds of millions of dollars to do that, right? So let's assume you want to do that a couple times. Let's assume, you're happy with 2 out of the 3. Let's say you've done 3. I mean, that is, that's easily more than $1 billion right there, right? And then, as you mentioned, you've got all these other costs. I mean, staff, I'm not even sure. I would love to see a breakdown. Maybe we can do that at some point of like staff costs might not even be, that's not even going to rate, right? Even if you're paying somebody $1 million, that's just like, it's like pocket change.
Well, this is what we have this question.
Not my pocket change, to be fair.
Well, Tim and I on our list of questions, it's like we're thinking transparency of this business, and I understand it's not public yet, so it doesn't have to report things, but how many specifics, this is your world, like your expertise, I am curious, how many specifics are you able to get access to or an understanding of when it comes to the business of OpenAI? In terms of users, ChatGPT, like what do we know really that might justify a $157 billion valuation?
Well, we do know that they are bringing in revenue. This has come from some reports. This has also come from information that we have learned. They also have put out some stats. Every once in a while, they'll put out a number or an updated number. We know that as of now, there are, I think it was 250 million weekly ChatGPT users, if I remember the stat correctly. When they said that their funding round closed the other day, they also mentioned that. So we know that. We also know from a recent report we had that they hit the mark of 1 million paying business customers for ChatGPT recently, and that would be across, I think it's 3 different businesses there. Three different products they have. One is like an educational one, and then 2 are different business products that they sell. So they are bringing in money. It's just, you got to bring in lots and lots and lots of money if you want to grow this kind of business. So the valuation and the amount of money that they've raised, I think it all makes sense.
Yeah.
In a sense. But it is not lost on me that these are all very large numbers.
If you could sit down with the management team and they said, all right, Rachel, we know you want to know more, but we can only give you one statistic to tell you like kind of how we're doing. What might it be? What would you ask? Or what would you want to know?
Oh my gosh.
Sorry.
That is, you're putting me on the spot like that.
I should have prepped you.
Okay.
I know, but you're so smart.
No, I mean, but the things that I'm interested in are probably probably might not interest other people. But I mean, I guess I would be curious to know just how has usage of ChatGPT changed over time, or what the churn is. Like how, as of now, like people that have been paying to use the service, how many are sticking with it? How long are they sticking with it? That kind of thing. Because I don't have the best sense of how people are using it over time and if they find it useful over time.
Right. You do wonder if somebody uses it and they're like, this isn't for me. And they stop using it, right? That's where churn could be
Exactly.
so telling.
It's also not the only game in town. There's Anthropic out there. I
Yes.
mentioned Perplexity. These are not necessarily apples to apples comparisons, but who would you say is the biggest competitor to OpenAI?
Ooh, in my mind, I often think of Anthropic. Some of that is probably because it was started by people who left OpenAI and has since been joined by a bunch of other people from OpenAI. But Anthropic has always been focused on. I mean, they've been very public about their focus on safety, and they are much more geared toward businesses from the get-go. Like they are not concerned with doing some of the bells and whistles that you would see on more consumer-facing products. Like, for instance, they don't have an image generator, and they have said this is because their clients don't really want that or don't really need that. They do, so they are very like methodical about how they're rolling out features, and they seem to focus very firmly on what business users want, not thinking too much about consumers for the most part.
Hey, Rachel, you went through the funding round led by Thrive Capital, which is a venture capital headed by Josh Kushner, brother of Jared. They put in 1.3 billion. Microsoft, which is OpenAI's largest backer, put in another 750
That's
million
right.
on top of 13 billion. The role of Microsoft, how much say do they have at this company? I think we've talked about this before, but it continues to be like kind of top of mind for me.
Yeah, I mean, I think right now that's definitely a question mark. The company was going to have a board observer seat, and that person is not actually doing that role now. It was something that we had learned was happening, and now sounds like it's not happening. So I think it's a little bit unclear, since it is still not a publicly traded company, what role the company has.
I also think, do you think it's interesting for the companies that maybe didn't invest, like a little known company called Apple? Like, does that surprise you at all or no?
I mean, nothing surprises me at this point because everything is weird, but but
That's fair.
it wouldn't shock me if Apple has other plans. Potentially they are already enmeshed with OpenAI. They have this deal related to ChatGPT. So who knows? I would definitely keep an eye on them and see, are they planning to invest at some point in the future, a la Microsoft or in some other way? Right now, I think it's still very TBD. I wouldn't say that they're not planning to invest because we just don't know.
Yeah.
Would you say, Rachel, that Microsoft, even though they're an investor to the tune of more than $10 billion in OpenAI, they also compete with OpenAI? Is that fair to say?
Sorry, say that one more time. What was
Is it
that?
fair to say that Microsoft also competes with OpenAI, even though they're an investor in OpenAI?
Right. And it's been like that the whole time, like since they invested. I feel like it stood out a little bit more to me like a year or so ago, and now it feels like maybe they're a little more complementary. But honestly, that's more vibes based in my mind.
Huh.
But they definitely are a competitor.
Are they a competitor in the sense, like, are their own internal and external tools, are they powered by OpenAI the same way that Apple's tools are powered by or will be powered by OpenAI? Are Microsoft's tools powered by OpenAI? Are they separate, distinct?
I think it depends. I think it really depends on the products. So you kind of have to look at the different ones to sort of break it down.
Hey, one other thing that we need to get into, and this is that idea of, I don't know, OpenAI maybe growing up a little bit and trying to figure out what its corporate structure is going forward. And they've talked about, right, moving from a nonprofit to a for-profit model. I know that in your story, in the team story, talk about some of the legal hurdles to doing that. Do you assume as you watch kind of the evolution of OpenAI in the last almost 2 years now or so, say that it's going to be a for-profit company? That's where it's going.
I mean, one thing that we know is that the company is not afraid to change the structure, right? They already did that once. I believe it was in 2019 when they created this really complicated structure that they have to this day. That has an entity within it that can bring in a profit. So I think based on that, we know that they may be willing to do that in the future. I think there's still a lot of questions about like could converting from what they are now to a public benefit corp, which is what we were hearing from our sources that they would want to convert to. Might that lead to a giant tax liability? That's a big unanswered question to me, because it's potentially possible that something like that, if it was many, many, many billions of dollars, could make it untenable to do that. So it's a little TBD right now. We're gonna have to do some more reporting and stay tuned.
I think also TBD is what an exit looks like for the investors of this company. Is anyone talking about an IPO yet at this point? Is it too early to be talking about that? Because that seems like the only exit here.
It makes sense, right? And we've seen other companies take a similar path where like they get to this point and then the next step is that. To my knowledge, I haven't heard anybody talking about it. However, definitely seeing investors increasingly talking about it. I mean, you know, they're not investing in this company for fun, right? They want to return at some point. So I'm pretty sure.
That's pretty sure. Hey, listen, you have a great deep dive that hit the Bloomberg terminal just about 2 hours ago, and it's entitled, or at least the headline on the story, OpenAI's Sam Altman concentrates power on his path to $157 billion valuation. Safe to say he is in the driver's seat, Sam Altman, despite being kicked out at one point, just, you know, in the past year? Was it earlier this year? It was like crazy. He's in the driver's seat and just got about 25, 30 seconds here.
Yes, I think that is absolutely what's happening there. It was really instructive to spend the last few weeks looking back at our previous reporting, looking back at the company's history, and also doing some fresh reporting and just kind of taking a broader look, because usually I'm stuck in the weeds with these stories on you know, what's been happening and how did we get to this point? Where did we start? Where were we in the middle? And though in particular, since he was brought back last year, a lot has changed and he is much more powerful now than before.
It's a great story. And as you say, the OpenAI of today bears little resemblance to its earlier self. So I highly recommend it. We'll put it out on Twitter. You get interrupted because of folks like us, but we so appreciate it. Of course, Rachel Metz, our AI reporter here at Bloomberg.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Well, we talked earlier about this morning's U.S. weekly jobless claims being consistent with low layoffs. Mike McKee joined us, too, to talk about some of the other data points that maybe question a little bit about some of the strength that we are seeing in the job market. We do get another read tomorrow morning on the monthly job picture. And on the labor front, we also heard from a big player when it comes to being an employer of a lot of workers. We're talking about Amazon.com today. Earlier, as it kind of does around this time of year, earlier talking about what it will need for the all-important and busy holiday shopping season.
Yeah, Amazon's going to bring about 250,000 seasonal, part-time, and full-time employees on for the U.S. holiday shopping rush. That's unchanged from last year. It's an indication that the company expects steady demand in its biggest market. Carol, I will say as of June 30th of this year, they had 1.532 million employees
on the
payrolls.
They employ a lot. All right, let's head to Atlanta and to Sandy Gordon. She's Amazon's Vice President of Global Operations, Employee Experience, and Relations. Sandy, great to have you here on Bloomberg Radio and Television. Tell us a little bit about how you guys determine demand for the year, how you make these projections, and maybe what your needs this year tell you a little bit about the market and the economic environment.
Yeah, Carol and Tim, it's nice to be with you all today, and thank you for taking the time. This is the time of the year when we begin preparing for what we do expect to be a busy holiday season. And as you stated, that preparation includes us hiring for 250,000 full-time and part-time seasonal roles across our customer fulfillment and transportation network in the U.S. And this is a diverse range of roles for applicants of all backgrounds and experience levels. We obviously take a look at what we project as our customer demand. We watch how we're performing in the year leading into the holiday, and that helps us to identify the volume of employees that we'll need, the number of employees that we'll need to meet our customers' expectations. And so we are really excited and ready to welcome back so many of our repeat seasonal employees. and we're happy to welcome new faces.
And customers, that's fair.
And customers, of course, and customers. I absolutely will say that.
Of which we all can certainly say, yep, Amazon customer, and certainly use it. Hey, Sandy, though, what is what you're seeing and your expectations for what you need for the holiday season tell you about how the economy is doing? As you know, we're Bloomberg. We talk a lot about soft landing, hard landing, what the outlook is. Do we miss a recession? How would you describe it based on your hiring needs and what you guys are expecting for the business come the holiday season?
I think we're projecting, what we're expecting, expected holiday growth in our customer demand. And I don't think we expect there to be anything less than that. I heard you at the opening say we're hiring similar to what we hired last year, and that is true. But that is what the additional 250,000 complements our already existing more than 1 million Amazon employees. And each year we get smarter in the way that we do business and projecting what our customers will want to purchase and making sure that those items are close to them so that we're able to meet the commitment to get it there quickly. And so just through our typical behaviors of continuing to improve the way we operate, we're able to do more with our 250,000 additional seasonal employees.
It's not too early to be talking about this. I kind of said that yesterday when we spoke to Ali Furman over at PwC. She's consumer markets industry leader, and she shared with us some data about how consumers are projected to spend a record high of $1,638 per shopper this holiday season. It's up 7% over last year, but it's lower than the 15% increase that we saw the prior year. In terms of hiring, your seasonal employees that you're hiring this year is unchanged compared to last year. What can you tell us about what that reflects when it comes to demand?
I think it not much for it as it reflects to demand is more so the fact that we are continuing to find ways to deliver smartly for our customers. And in doing so, we have been spending a lot of time making sure that we can anticipate our customers' needs and ensure that the inventory is correctly placed so that it can get to them quickly. And we'll be able to do that with our employees, the 250,000 that we're adding to our already more than 1 million complement.
So Sandy, in other words, it's gotten more efficient just in the last year. You've been able to find efficiencies. Can you tell us what those efficiencies are or how much more efficient you've been able to become just in a short time?
Yeah. I think what we could say is, we're always a culture that is figuring out how we can do more and continuously improving. And our ability to deliver fast and even faster is rooted in structural changes, like placing, as I said before, like placing items as close to customers as possible, moving from a national to a regional network, and thus reducing the touch points and transportation distances for deliveries. And so with that, we are able to deliver, faster and meet our customers' expectations with the projected headcount that we're identifying.
Hey, one of the other things that we were thinking about when we looked at the number, Sandy, we're curious if the base of full-time logistics workers, did that base increase year over year in a way that makes the number that you guys are needing to hire for holidays being steady misleading? In other words, your full-time logistics workers have been increasing ahead of this. And so maybe that explains why the number's consistent.
Our full-time and our part-time employee numbers, they can fluctuate throughout the year. But the value of bringing our seasonal employees on is that they allow us to ensure we're able to deliver for our customers while aiding our permanent employees in being able to maintain their flexibility with their schedules. So they're able to spend time at home with their families around the holidays. And so it's why this program has been so popular for us, not only with our permanent employees, but also with our seasonal employees. It's why we see so many people returning, because there is flexibility in it. And it is an opportunity to earn a good wage with a work schedule that aligns with whatever's going on in their personal life.
Hey, one of the other things, listen, we've got to ask you, Sandy, in a week where, we've got East Coast and Gulf Coast ports workers on strike. There's been a lot of activity over the last couple of years when it comes to union organizing. How hot is the temperature? How would you describe it when it comes to labor organizing? You guys, are among, certainly some of the companies that, these issues have come up against.
Yeah. Carol, we respect our employees' rights to voice their opinions and encourage them to share their experiences in the workplace. And we have a culture at Amazon that respects and values each of our team members as individuals, and we favor each of our team members having their unique voice heard, working directly with our team. The fact is that Amazon offers competitive pay, health benefits on day one, opportunities for career growth, and engaging, safe work experiences. And working directly with our employees, we can look for ways to continuously improve. And it's, in fact, working with our employees, we know that wages are a very important part of what makes an employee satisfied to work at a company. And it's part of the reason we have an annual wage review, a wage and benefit review. And just a few weeks ago, we announced that we're making a $2.2 billion investment in employee compensations and benefits for our fulfillment and transportation employees in the U.S.
All right, gonna leave it on that note. So glad we could get some time with you and really give us a window into what you guys are doing, especially for the upcoming holiday season. Sandy Gordon, VP of Global Operations, Employee and Experience Relations at Amazon.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Our own Amy Orr, Carol.
Yeah.
She covers IPOs here at Bloomberg. She reminded us in a story this week that overall U.S. IPOs continue along a steady path to recovery. $33.5 billion have been raised so far this year. It's nearly 53% more than the volume for the same period in 2023. Data compiled by Bloomberg show. Yes, but however, tech IPOs are lagging. The aggregate amount raised by tech IPOs so far this year amounted to $6.7 billion. It's lower than the $8.3 billion for the same period last year. This is also according to Bloomberg data.
All right, so let's get into the IPO landscape. For more on that, we bring back with us here on Bloomberg Businessweek, Rachel Gehring. She's EY America's IPO leader, and she joins us, I believe, from Tennessee. So Nashville. Yeah, you are. Nashville, Tennessee.
You guys are both right.
Check. How are you, and how would you describe the IPO market right now?
Well, I'm doing great. Thanks for having me. IPO market, as you mentioned, I think it's on a healthy recovery, yet steady. So we're not in that, kind of sharp hockey stick that everyone is looking for, but that slow recovery with a lot of optimism out there, just navigating through this election cycle, some other geopolitical tensions, but optimistic for 2025.
Is it really geopolitics, the market environment, politics that's holding it back? Or is it, how much is still that there's a fair amount of money, private money maybe out there to keep companies private longer? What is there some other dynamics going on? I'm just curious.
Yeah, no, the private market is certainly, a lot of that attention is clearly towards AI. And so that the private markets have been a bit sluggish as well. But ultimately, what's been holding back IPOs largely has been the cost of capital. So now, as we're starting to see rates decrease, the macroeconomic, factors really improving, right? Strong data coming out. So optimistic for the remainder of this year going into next year. But the first part of this year and as we saw even last year, just keeping it a sluggish recovery, but a slow, steady recovery nonetheless.
What about when it comes to tech specifically? What are you seeing in terms of tech IPOs?
Tech IPOs, still leading largely in volume, but as you mentioned, not at the levels that we're used to seeing in the past. Largely that's because what we're seeing right now are large scale companies IPOing. The investors are still favoring the large companies' proven profitable path to profitability, so forth. What we need to see IPOs, the volumes and so forth, get back to historical norms. We need to see more of those growth companies coming to market. That's really where tech plays a role, and yet we need other factors to come into play. I think as interest rates continue to decrease, that will certainly help.
Okay, that's exactly where I want to go. Do we ever see a return to the IPO market of zero interest rates without zero interest rates?
I think we will. We will. It's not happening overnight, but when we look at, coming out of the highs of 21, we've got, 23 doing better than 22. 24 is already outpacing full year 2023. So we're making the right, we're on the right trajectory. We need some of these elements, the rates to continue to come down, really to stick.
Yeah, and it's interesting. Like, if we don't get, though, kind of some high growth IPO specifically in the tech space, do you then anticipate that it will be a mellower IPO market, that we need that as a catalyst? And if we don't get it, it's going to be kind of quiet-ish?
We need growth IPOs to come back, so largely in tech, but quite frankly, across all sectors. But that those growth companies, the environment needs to continue moving in the direction that we're going now, but make that a strong market for growth companies to come to market. Cost of capital needs to decrease, and then we'll see IPO volumes continue to increase.
What about the pipeline? Because it so much of this has to do with private capital and what we saw in the last couple of years in terms of funding for some of these companies. We spent a long time today and yesterday talking about OpenAI and just how much money
I was just thinking about that
OpenAI
right?
has raised.
Like, do you need OpenAI to go public? I mean, Rachel, let's just put it out there.
Seriously. How do you watch that company?
Yeah, can't speak to OpenAI and they're going public, but ultimately AI is certainly a sector or one that's getting a lot of attention, and so frankly, it's getting a lot of the funding. A lot of VC funding we're seeing pointed towards AI. I think over 30% of VC funding this year is directed towards AI in AI related companies. So a lot of attention there. A lot of the VC private funding being interested there, therefore investing. But what that means then is those companies can stay private for longer, continue working on that technology. I think there's going to be, there's still time for seeing more AI or AI related companies to come public. They need to prove out that technology, really have a strong story for a public facing debut.
Yeah. So what do you guys do then in the meantime, as you kind of wait for this to happen? I mean, is it a case of companies coming to you? Do you guys reach out to try and kind of gauge where people are in the IPO process, or even the thinking about the IPO process? Excuse me.
Well, the process itself, and that's a great question. The process is not one to take lightly, and it doesn't happen overnight. It takes thoughtful planning. Really getting your organization public company ready can take anywhere from 12 to 24 months. So we're encouraged by the pipeline and the shadow pipeline via the companies that we're working with right now who are planning to go public, though some of this activity we won't see come to market until 2025, and in some cases even 2026. It takes a lot of time. It takes again, thoughtful planning to organize the company around getting ready for to be public. Access to talent is one key element that companies start to look at early, and making sure that they have the right people and the processes in place to be ready when the market opportunity is right for them.
Hey, Rachel, we spoke yesterday to Triago CEO Matt Swain. He's global CEO Matt Swain, talking about private equity. And one thing that he mentioned to us was that because of the higher rate environment over the past couple of years, there are a lot of companies out there that are owned by private equity, that are still owned by private equity, and they haven't seen that exit that typically would have seen in a lower rate environment. Are those the types of companies that you think will be going to market, or are those going to avoid the public listing process and they'll stay private?
I think we will definitely see more companies that have private equity investment coming public. Completely agree. When I look back at kind of the historical norms, pre-2019, over a course of, generally speaking, IPO companies that were IPOing, 20 to 30% of those were private equity backed. That is not what we're seeing. We're not seeing those levels today. So to your point, the private equity backed companies are staying with PE longer. it will naturally run its course where those companies, there needs to be a sale or there will need to be an IPO. So I do anticipate as the market continues to recover, as valuation targets, start to right size and kind of meet each other, we're going to start seeing more PE-backed companies coming to market.
How difficult, though, is it, do you think, for some of those PE-owned companies at this point? We've done some reporting, Bloomberg just doing some reporting, it's a tricky environment, right? And not being able to exit and maybe having to lower valuations and so on and so forth. What are you hearing? How would you characterize what's going on with private equity portfolio companies right now?
A lot of the companies that we're speaking with, the focus is on managing cost. How are we investing in our growth strategy in a very smart, scalable manner? So those are top of mind. Cash flow, forecasting, so forth. Those are areas that I see a lot of these companies paying particular attention to, where the focus is, making sure the business is kind of right sized, and there's a strong growth story that's being kind of built, and building that out in a very compelling manner.
So, do you think 24 will be better than 25, or 25 will be better than 24?
I would say, sitting here right now, all things, sustaining, 25 will be definitely better than 24.
Regardless of who's president?
I would say regardless of who's president.
Okay. All right.
Yeah. That's today's prediction.
That's fair. Hey, listen, a great overview of the IPO market. So grateful to Rachel Gehring back with us. She's EY America's IPO leader, joining us from Nashville, Tennessee.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, coming up on about 18 minutes left in today's trading session, getting ready to wrap up the Thursday trade. Shortly, we'll head over to our TV colleagues, counting you down to the close on this Thursday. In the meantime, we do want to talk a little bit about the trade. It feels like we're once again kind of just in a little bit of a holding pattern, although certainly some yin and yang based on economic data that we got this morning, the concern over the tensions in the Middle East. So we'll see what our next guest has to say, because actually some optimism, but not necessarily here in the United States.
Yeah, we got with us Lance Cannon, portfolio manager at Hood River Capital, joining us from Palm Beach Gardens, Florida. Lance manages the Hood River International Opportunity Fund, ticker HRIOX. Year-to-date, it's up a bit more than 17%. It puts it in the 76th percentile compared to peers. Lance, welcome. Look, before we get to stock picks and before we get to your optimism on international small cap growth, talk to us a little bit about the macro right now and what you're seeing in this environment, big picture.
So I think I'm probably not alone when I say this, that there's a lot of uncertainty that's out there. And while we're not necessarily top-down investors here at Hood River, we are cognizant of what's happening out there. There's definitely a lot of things that we're looking at and trying to figure out at this juncture. But for the most part, what we're trying to do is look for high-quality companies that we believe can beat earnings and are going to see beat and raise opportunities going forward.
Why small cap and play it that way?
Yeah, so from our perspective, small cap right now is undervalued relative to large cap. Historically, if you look at the large cap index, specifically from my perspective on the international side, the large cap indexes non-US have historically traded at a discount relative to the small cap index non-US. And right now that is inverse by 2 or 3 turns on the multiple. And so from our perspective, we view that there's a lot of great opportunities in small cap in general, but specifically if you've got the right stock pickers out there working for you, that are identifying the companies that are a high quality nature, these things are going to work to your favor in an even greater fashion.
Hey, who are your typical investors? I'm curious if it's institutional, if it's retail. I'm just curious.
Yeah, we have about a 50-50 split between both retail and institutional at this juncture, and that will continue to kind of be, I think, the mix on a go-forward basis.
What kind of flows are you seeing coming in, coming out?
We are seeing, we are very fortunate at this juncture to be seeing a nice amount of flows coming in and very little outflow.
Okay. Where are the flows coming from?
The flows it's a mix right now, almost, I would say, a 50-50 split between both institutional and retail.
Even as you continue to get new money?
Yeah, I said the new money just because for the most part, we have been historically a more institutional-based company or investment platform for many years. We opened up to the retail side of things, I would say, 6 or 7 years ago in kind of real more grand order and kind of had gone after that. So our inflows have been maybe slightly more tilted towards the retail side of things, but for the most part, I would still say it's pretty split evenly.
It's interesting. I kind of love the international and global space, but feel like we used to talk about it a lot more. Investors used to invest in it a lot more. And then you had just indexing and the S&P 500 on fire for such a long time that you could be a passive investor, right, in large cap U.S. names and do just fine. So take us there. Give us a name that either you've had in your portfolio that you've recently added to, and walk us through the investment thesis.
Sure, happy to. So one of the names that we're really excited about right now is a company called Do & Co. out of Austria. The ticker is DOC. AV. We are very excited about this. This is a company that has kitchens at airports or adjacent to airports around the world. Is one of their main courses of business. These kitchens are serving the international flights the food, and they're not, so no longer are you getting fresh, or you're not getting the frozen food that then is heated up, but you're getting fresh food delivered to you. And that goes for basically all types of cabins, depends upon the airline that you're with. They've been expanding globally, so now they're here in the U.S. as well as across Europe. They're expanding into Asia as well. But these kitchens are underutilized at this juncture, right? Because they just started entering in. They're partnered with Delta here in the U.S. They've got a few other airlines they're working with. And so those kitchens they've built, in Miami, New York, and other major airports around the U.S., they're underutilized. And so those margins are pressured relative to what they can be as they continue to gain greater utilization within the kitchens. We believe that utilization is coming, that as they go further with the likes of their current clientele, as well as add additional airlines and maybe adjacent opportunities within those cities, that the margins can continue to expand. The top line will grow a little bit faster what the street's projecting out there in 2025. And that we will then see EBITDA margins expand faster than what the street's expecting, and that will lead to even greater EPS growth. The company currently trades at a discount relative to what it has historically from a multiple perspective. We believe that will not only come more back in line, but then also you get the benefit of a faster earnings growth perspective.
How's the food?
It's really good.
From someone who travels with Tim on an airplane often, eats all of it.
Yeah. My favorite though is the ice cream sundaes.
You do.
It doesn't. I don't like. I'm not going to go out and buy an ice cream sundae.
That's a United specialty, isn't it? Usually,
is it? I don't know.
Isn't it United?
I'm not going to go out and buy like an ice cream sundae on a random day.
And the warm cookie, isn't that?
But if I get served one on an airplane, offered one on an airplane,
the best.
You can bet that I'm going to eat that.
Lance, all I can tell you is we will travel and we'll quick grab a good meal before we even get on the plane because it's a late flight, and then we'll get on the plane and I'll look over and I'm thinking, all right, I'm going to go to work now.
Yeah, well, I'm not.
Tim is eating another meal. That's just the way it goes.
Hey, if they bring it by on a tray, I'm going to eat it.
I know.
Hey, Lance, I know
that's fantastic.
We have a couple of minutes left with you. I want to get to TBB. They got stores in Mexico. It's another one of your picks.
Yeah, so this is a competitor to Walmart Mexico. Recently IPO'd here in the U.S., but when we talk to consumers about their experience at Walmart Mexico versus TBB, they mentioned that these stores are cleaner. They're getting the same type of prices. They're seeing sometimes in some cases more products relative to what Walmart has, which is somewhat surprising given what we experience here in the U.S.
Tiny market cap compared to Walmart. I mean, this is a $3.3 billion company.
Yeah, they have a lot of opportunity to grow. The top line's going to grow in two ways. One will be through same store sales, which we think will be better than what the street's projected. But the other way is going to be as they continue to expand and build out their own store base. So they're still relatively small, particularly relative to Walmart there in Mexico, with a lot of white space there.
Could Walmart buy them? And Walmart's worth over $500 billion, $645 billion.
And I think that's possible, but I think there's also going to be some regulatory issues that would come if that were to happen, right? Okay. I think that everyone wants to see some type of competition that's out there. And then so as they continue to have the opportunity to grow and take and gain market share, if you will, they should see leverage both from the same store sales increasing, and then also as they get leverage through their stores, at least the EBITDA margin expansion.
And you said they're coming in the U.S. just quickly.
No, they are listed here in the U.S.
Oh,
so
got it.
You can actually buy the ticker here in the U.S., but
Okay.
it's a Mexico company with everything in Mexico.
Okay, just checking. Yeah, more than 2,000 stores.
Yeah.
Pretty cool stuff. Lance, thank you. That was fun. Lance Cannon, portfolio manager at Hood River Capital Management, joining us from Palm Beach Gardens, Florida. I love taking a look at international companies.
Yeah.
Can I just put that out
I would think it's fair to say get a little lost in the shuffle with so much focus
Yeah.
on the U.S. trading day, the S&P 500.
But there used to be a point where, especially like small cap international,
Yeah, like you
people
said,
were
the
really
S&P
into it.
500 has just been dominating over the last decade.
But you know, you can get some
Good value?
alpha.
Maybe.
Maybe.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.